Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Well, the Gift Nifty is hinting at a lower start for the Indian market below that crucial 22,000 mark. Looks like Nifty is likely to remain in that consolidation mode today as well. Of course, lots of cues to digest in the form of HDFC Bank. ADRs have slumped over 7% post mixed show in the third quarter. We'll be taking stock of that. We'll also be discussing a whole host of other stocks that will be in focus today, and of course we'll also be taking up all your stock related queries on the show. So if you have any stock related queries, send them in to us on our YouTube feed. We'll try and take them up. But before we move any further, as usual, let's take a look at the top stories at this hour. Wall Street ends largely lower as bond yields edge back above that 4% mark. In fact, dollar has also hit a one-month high after commentary from the US Fed suggests that an easier monetary policy may come slower than what the street has been anticipating. Asia too mirrors weak sentiment, although China GDP has come in slightly below estimates at 5.2% versus the estimated 5.3%. And the Gift Nifty, as I mentioned, is hinting at a start even below that 21,900 mark. Crude remains largely range-bound with Brent below that $78 a barrel mark. The Middle East tensions are supporting prices even though dollar index has strengthened. HDFC Bank ADR slumps over 6% overnight as the bank reports a mixed quarter amid merger overhang. Profit beats estimate, but net interest income comes in lower than what the street was projecting. And among key earnings today, we'll be watching out for Asian Paints as well as LTIMindtree. And among other stocks in news, ICI Securities reports a strong 60% jump in profit. Meanwhile, UBS initiates coverage with a sell rating on Bajaj Finance, feels competitive pressure not fully priced in yet. And top economists and global CEOs are upbeat on India at Davos. IMF's Geeta Gopinath says that India is benefiting from the shift of production from China. RBI Governor Shaktikant Das meanwhile says that despite uncertainties, Indian banking sector is one of the best in recent years and financial sector is also stable. Well, let me first bring on board our technical expert for today. Joining me is Aamar Singh, who's the Senior Vice President at Angel One. Great to have you on this show, Aamar. Of course, we are in a consolidation mode after topping that 22,000 mark, and looks like today we are headed lower as well, below that 22,000 mark, right? But it's the Bank Nifty that will be in focus, given the fact that numbers from HDFC Bank have largely disappointed street, right? So in that light, how would you expect Bank Nifty to behave today?
Yeah, a very good morning. And looking at Bank Nifty, what we've seen is that Bank Nifty has been more of in a consolidation zone because it's not been able to take out its previous high of 48,636 that it had made on 28th December. So clearly it was hinting that unlike Nifty, which recorded lifetime highs, Bank Nifty has not been doing so. And the HDFC Bank as well as ICICI, these two, if you look at them from a long-term perspective, they are clearly in a consolidation zone. There's no trend per se in these stocks, which are heavyweights, both in Nifty as well as in Bank Nifty. So looking at Bank Nifty, I would say there are two levels to watch out for. On the downside, 47,400, 500, that's a very strong support zone where we could witness some correction and a pullback from there. On the upside, 48,500 to 600, that's a zone of resistance. Technically, if you ask me, on the charts, on the short-term charts, they clearly indicate that there's no trend. It's more or less consolidation. It's more of range play. However, on the medium-term charts, the trend is strong. The momentum is there, but we'll have to wait for these levels for Bank Nifty.
All right, that's the view on the Nifty Bank Index. But on that note, let me also, get on board Kaitav Shah, who's the lead BFSI Analyst at Anand Rathi Institutional Equities. Kaitav, great to have you on the show. I want to get in your first reading on the HDFC Bank numbers. NII below estimates, 2% below CNBC TV18 estimates and 1% below our money control pool, right? Margins have also been muted on a quarter-on-quarter basis, which was largely expected. So what has been that one big disappointment that led to a 7% kind of a slump on the ADR overnight?
Good morning. ADRs are a bit illiquid and might not indicate the true extent of what a price indication should be the following morning. Plus, US markets were closed on Monday. You'll probably have to account for that as well. The other thing is that it's not more so about the numbers miss. No, you have to look at the context. The context for HDFC Bank is that they have acquired HDFC Limited, which was more than 20% of its balance sheet, and it generally takes about a year for the merged entity to take shape, a proper shape, and give us more consistent numbers. So you have to keep that always in mind. The second thing is, I think post Infosys results, there was this a lot of upbeatness in HDFC, which had also been an underperformer, wherein they thought that with even inline numbers, the stock can kind of move up. So I think a lot of these reasons are more about the positioning before the results than probably something in the result itself. From the result perspective, yes, there were a few hits, a few misses. Couple of hits were essentially that the other income remains strong. You see fee income, you see retail income, and MSME growth still there into the balance sheet. What is perhaps a miss is that, of course, the CD ratio is on the higher side, and the LCR ratio, both at 110. One needs to go down, and the other needs to go up. So you might see that the deposit rate will finally either move up, or you might sacrifice the growth on in the shorter term, in the nearer term, than on the medium term to long term. Long term, the story still remains intact. But because of merger overhangs, we have a hold rating on the stock.
All right, hold rating on the stock. Of course, the merger overhang is clearly visible. But when it comes to margins, at least in the near term, would you be worried, given the fact that, some brokerages have said that, the levers, margin levers are clearly missing at the current juncture. Would you concur with that?
Absolutely. Next couple of quarters, it would be safe to say that you don't have any margin kickers from them.
And from the management commentary, what is your key takeaway here? Because the management has maintained that they will be shifting focus more to the retail side, right, to lift margins. But do you think that would be possible given the fact that especially in the wake of the RBI crackdown on unsecured lending?
So our HDFC Bank, if you look at the numbers, has been going slow in the personal loan space. They have either consciously slowed down or more of a strategy till the time they had the merger into place. But look at the kind of database that they have got from HDFC, the kind of target market that is there. So it's just about getting the acts together there, getting the processes, systems in the merged entity together, then they'll be able to do that. They've always been a retail bank, I think, for the last 25, 30 years that I've known. They'll do more retail is not doing justice to them, but I believe that it takes some time, a merger of this size where you have to get the processes right, integration right, people right at the right places, all of that. So you will have to give them some time.
And valuation wise, how is the stock looking to you, vis-a-vis other peers? Should one really look at HDFC Bank now compared to peers like ICICI Bank? Because it has underperformed, the stock particularly has underperformed vis-a-vis other peers. So would you say that this stock offers more valuation comfort now, and perhaps that's why, it could be a preference over other peers?
In terms of preference, I think ICICI indices still remain our top picks for the large cap banking space. Overall, as a sector, we think large cap banks are much better placed than some of the other peers in terms of the risk reward. So HDFC's risk reward is favorable. ICICI's risk reward, we believe, is favorable. In fact, most of the large banks are placed in that bracket. But our top picks would remain ICICI Indocent at this point in time.
All right. And what are you expecting in terms of earnings from ICICI Bank? Because numbers are coming out this Saturday.
Right. Sorry?
What are you expecting? What are your expectations from ICICI Bank in this quarter? Numbers are slated to come out on Saturday.
We expect a very healthy growth. We don't expect any large hiccup in ICICI's numbers. The question is more about their NIM Now, I sense that our sense is that the NIM will compress a bit. It was built into our preview as well. The question more is when does it start improving? Management commentary around whether it will stabilize around fourth quarter, start improving next year is what will drive the stock.
Right. Yesterday, the Federal Bank reported its numbers, and the reaction was, on the other side, in the sense that the markets reacted negatively to the numbers. Of course, slippages were higher, and asset quality had deteriorated slightly vis-a-vis expectations of improvement. So, do you think that is setting a trend for some of the other mid-cap banks?
I think it would be a bit early to say that we have trendsetters, both of the results yesterday. I think in terms of NIM, yes, NIM correction has been expected. That was well before these results came. Growth continues to remain strong, and we believe asset quality is not too much of an issue, at least for this quarter. It's not key monitorable for us.
Right. After the kind of uptick that we have seen in PSU banks, would you say that the valuation comfort is missing when it comes to some of these high flyers? We've seen Federal Bank, Canara Bank, all these banks run up quite a bit, right? So would you prefer large cap banks, private banks, vis-a-vis mid cap PSU banks now?
At this point, we do prefer large cap banks. Yes, that's what I come.
All right. So that's the call. With that, Kaitav, thanks a lot for joining in this morning and sharing your thoughts with us. Always a pleasure interacting with you.
Thank you.
Well, let me go back to Aamar then. Aamar, we're getting some queries on HDFC Bank on our feed. For somebody who's invested in this particular counter and is making a loss, what should they do? Should they, stick to their guns, or should they look at booking slight or partial losses at the current juncture?
So, as I have spoken, is that ICICI is more or less ICICI Bank, you've mentioned, or HDFC?
HDFC Bank, Aamar.
HDFC Bank, okay.
Right, that's correct.
Yeah, so if I look at HDFC Bank, so HDFC Bank, I would say from an intermediate term perspective, it's positive. Long term, more or less, if I look at the long term charts, they clearly point towards consolidation. So I wouldn't suggest exit because today the market could open lower for HDFC Bank post its quarterly results. So the levels to watch out for on the downside is 1570, 1600. That's a very strong support zone. That's a zone of support. But on the upside, 1700 and then 1750. That's a zone of resistance. So what it effectively tells me is that it's more or less capped on either sides. So it's a good trading play if you can buy close to the 1600 levels or 1620 levels. That's a good level because from there you can expect a bounce back towards again 1700. So 1700, 1750, that's a very strong resistance zone because until the time we don't see a breach of that, I would say it's more or less consolidating, and that's what we witnessed in HDFC Bank for a long period of time because there's no trend even on the long-term charts.
All right, that's the view on HDFC Bank for all those who wanted to know how to navigate this particular stock. Hope that answers your queries. But let's talk about an L&T Tech as well. Stock of the day for me today. Profit has grown by 6.5% and revenues are rupee revenues up 1.5% on a quarter-on-quarter basis. The dollar revenue has largely been in line on a quarter-on-quarter basis, wherein the CC revenue growth has come in below expectations. Of course, L&T Tech has maintained its FY24 revenue guidance outlook of 17.5 to 18.5%. Now, L&T Tech particularly, last 6 months, of course, mid-cap IT has done extremely well. But of late, over the last 1 month or so, has been pretty sideways, this particular stock, L&T Tech. So going forward, yesterday as well, ahead of, yesterday it was under pressure. Ahead of earnings, but what are the levels you're watching out for on this one? Do you think is there a clear trend emerging right now, or do you think it will remain sideways as it has over the last few months, last 1 month?
See, L&T Tech, if I look at the trend is positive, there's no doubt about it, but we've seen some weakening of the trend on the short-term chart. So it was more or less consolidation which we witnessed, and the stock corrected from almost 5,400 levels to sub 5,000. Currently, it's around 53.50 or so. Last couple of days, we've seen some profit booking. So overall, I would say that the trend is positive. If the stock corrects further, then it could be an opportunity to buy somewhere around 5,000, 5,100 levels. But one needs to remember an important level. And that is in March 2022, the stock had made a high of almost 6,000 levels. So it was 5,955. So on the higher side, the stock has a potential to rally towards those levels. So 5,800, 5,800, 6,000 levels, that's a level where the stock could rally further, but the stock would need to consolidate and then trade above the 5,500 mark for that. Because what we saw the last couple of days is the stock breached the 5,500 level but was unable to sustain. So sustaining of that level, then you could expect the stock to rally by 5 to 8%. On the downside, the stock is strongly supported around 5,000 to 5,100. If you ask me the trend continues to remain positive for the stock.
Would you say the same about LTIMindtree? This stock hit a fresh 52-week high yesterday, and numbers are slated to come in today. Of course, expectations, say that revenue may grow in at 1.6% on a quarter-on-quarter basis, aided by manufacturing. But of course, BFSI and high tech may remain an overhang, as it has been for other tech giants as well. But given the fact that large cap IT has set the trend better than feared numbers, and stock reaction also is something that we have already seen play out, right? But you've already mentioned that L&T Tech, of course, the trend remains on the positive side. What about LTIMindtree? Higher highs going forward?
Yeah, I would say that LTIMindtree is also positive on the chart. So if I look at the medium-term trend, the long-term trend, that definitely has a positive bias. Short-term, we are seeing some sort of consolidation, some sort of double top formation on the chart. So effectively, that tells me that the stock has got resistance around 63.50, 64.50. That's a zone of resistance for the stock. So that would be a double top formation technically in the charts, and even the short-term charts are indicating some sort of consolidation, some sort of profit booking. So one needs to remember that the stock from a long-term perspective, intermediate-term perspective, the stock is in an uptrend. There's no doubt about it. From a short-term perspective, we are seeing some consolidation. So any pullback in the stock can be used as a buying opportunity for any major rally. The stock needs to sustain above the 64.50 mark, because earlier in December of I would say 21, the stock had made a high of 7,564. So the stock definitely is not at its record highs. There is potential on the upside, but for that the stock needs to sustain over the 64.50 levels.
All right, that's the view on LTIMindtree. Those are the levels to watch out for. And Sai Kumari had a query on this particular stock. Hope that answers your query. But we're also getting queries on an angel one. I'm sure you will not be able to answer that. But let's talk about an ICICI Securities. 3.5% kind of an up move yesterday. Numbers also look fairly strong on the face of it. What is the trading strategy here?
See, ICICI Securities is strong on the chart. So even from a short-term perspective, the stock is strong. From a medium-term, long-term perspective, the stock is strong. If I go back in time, so in March of 2022, the stock had made a high of 838, and the recent high was around 800 levels. So what it effectively means is that higher levels, they would witness profit booking. So anywhere around 800, 830, 40 levels, that would be a level where we'd witness a lot of profit booking. That's what is happening. Once it takes out that level, then the stock has a potential to, because the stock's all-time high was 896 in December of 2021. So the stock is in an uptrend trajectory. Any correction can be used as a buying opportunity. If you ask the levels for where the stock has got good support levels, so somewhere around 730, 750, that's a strong zone of support. For any major upside rally, the stock needs to sustain over the 800 mark. As far as the trend is concerned, from an intermediate term, long-term trend perspective, that continues to remain positive for the stock.
Right, that's the view. Buy on dips is the strategy here. But what about a Nalco? Stock has been, in a strong uptrend over the last month or so. It has gained somewhere around 20%. We have a query coming in from Jeevan. Wants to know how to navigate, this particular up move. Should one ride the momentum really here?
See, Nalco is definitely very strong on the intermediate term trend, long term trend, and long term if we go back. So it had made a high of 132. That was again in March of 22. The stock is trading above that level. Yesterday's, I would say, the chart pattern which it has formed, that is an interesting pattern. So it made a high of 144, closed around 138. So what it tells me, and there was also say on significant volumes. That is a level to watch out for, I would say. 145 on the upside, that's going to be a very strong zone of resistance. On the downside, the stock is very strongly supported around 128, 130 level. So ideally, if there is any correction, that can be a good buying opportunity because there is no trend change or momentum decline from a medium term to long term perspective. From a short term perspective also, yeah, we are seeing some sort of consolidation despite the high being made. So you'll have to watch out for those levels.
Right. Lots of queries on railway stocks trickling in, the likes of IRFC that are in a very strong uptrend, right? IRFC more on the finance side, but still counted as a railway stock, so to say. IRCTC and the likes, Anand Upadhyay wants to know your thoughts on IRCTC as well. How should really one go about, navigating the up move? Because these stocks are all in very strong up move, right? Do you think entering at these levels would mean good risk reward ratio, or do you think dips, buy on dips should be the strategy here?
These stocks are definitely on fire, and I would say the way the stocks have rallied, if I talk about IRFC, it's been a phenomenal rally because towards the mid of November, it was trading around 70 and currently it's around 140. The stock has more than doubled. And also what we've seen is that on significant volume. So the trend remains up. The question is that, is this a good time to buy? So you always need to remember that is that you'll have to, when you're entering a stock, you'll have to look at the risk reward ratio. So current levels, I would say it could be slightly risky because the stock now has got the support earlier, which was acting as a resistance was around 100, 105 levels. So 100 to 110, that's a support zone, which is significantly lower as compared to where the stock is trading right now. So I would say that entering at these levels could be a risky venture. Talking about the other stock, IRCTC. This is one stock, again, it was long due for a up move because the stock wasn't really going anywhere. The trend remains positive and strong for the stock, but not at the current levels. I wouldn't recommend buying at the current levels. Otherwise, because we are seeing some decline in the momentum on the daily charts. So though the trend remains up, there is a decline in the momentum. But yeah, on any correction, now where does one actually buy? So you'll have to wait for some correction. So ideally, the support level for the stock is around the 890, 900 levels. That's the support zone where the stock, if it corrects, then it could be a buying opportunity. At the current levels, I wouldn't advise.
All right. At the current levels, it would be a bit risky to get into these stocks. But of course, buy on declines remains a strategy here. But a couple of more queries I want to quickly squeeze in. Amar, Shivanshu Gupta has a query on IEX. He's holding shares at the rate of 171 rupees per a piece rather, and he's making a bit of a loss here. He wants to know, should he book losses or continue to hold it? Stock has been doing well over the last 1 month and 6 months as well. Do you think it makes sense to hold on to it and wait it out before thinking of booking losses?
I would say that IEX is one stock which was in for consolidation. Then from 120 levels, it rallied towards almost 173. Currently, it's around 164 odd levels. Ideally, you can hold your position because the intermediate term trend continues to remain very strong. Long term trend, I would not say is strong. It's more or less displaying consolidation. So what you can do is it has got good support coming around the 156, 157 level. So ideally, you can put a stop below that, hold your position. Once it starts trading above 173, then you could expect some sharp rally in the stock towards the 185, 188 levels.
All right. The next query is coming in from Rakesh. He has a query on Ambuja Cement. He has 3 lots of 560 call option of Jan expiry and at an average price of 7 rupees. He wants to know whether he should hold on or how should he go about it, because he's making a loss of 20,000 here.
Yeah, see, looking at Ambuja Cement's technically from a medium-term, long-term perspective, is positive and strong. But from a short-term perspective, because options, when you are into buying of options, it's all about timing, and the lesser period you hold, the better off you are, because the time decay works against you for an option buyer. So looking at a short-term perspective, the stock is in for consolidation. There's no trend in the stock from a short-term perspective, and that's what we are witnessing over the last few trading sessions. So what you can do, ideally, the stock has got good support coming around the 518 level or so. Currently, it's around 528. And the stock first needs to sustain above the 538 levels for any upside rally. But if you get an opportunity, once it sustains above you 538, then you can expect some upside move towards 545, 550 levels. So it can be an opportunity to exit because the stock from a short-term trading perspective does not indicate any clear-cut trend. It's more of a consolidation in Ambuja Cement.
All right. Well, this wraps up our query segment. But, before I move on to your picks, I want to know your thoughts on a Bajaj Finance and how it's looking on the charts, given the fact that, UBS has come out with a report on this particular stock. They have initiated coverage with a sell rating, target price of 6,000, which is significantly lower from the current levels of 7,400 or thereabouts. On the charts, do you see weakness or would you say that it is poised for some bit of recovery after being on the downside for quite some time now? Over the last 1 month, the stock has given a negative return.
See, looking at Bajaj Finance on the long-term charts, intermediate-term trend, it's not going anywhere, at least in a hurry. That's very clear on the charts. So that tells me that the upside is definitely capped for the stock, because the long-term or the intermediate-term trend is not there at all. It's a clear consolidation zone. Higher levels will be sold into, and the levels to watch out for the stock from a medium-term perspective, I would say 6,900, 7,000. That's a zone of support for the stock. On the upside, the stock is capped around the 7,800, 7,850 levels. It's more of a range trade. There's no trend in the stock.
All right, no particular trend visible when it comes to the charts of Bajaj Finance. That's the call. But with that, Aamar, what are you flagging off for viewers this morning in terms of stock recommendations?
Yeah, one is IOC. IOC is one stock which is definitely going very strong on the intermediate term, long term trend, and even from a short term perspective. Currently, it's around 143, 144 levels. Any pullback towards 140 can be a buying opportunity with a stop loss of 127 and a target of 163 on the upside, because if I look at the stock has been displaying strong bullish momentum on the intermediate term. On the long-term trend, there's significant volumes as well. And the second stock to look at is Paytm. This is one stock, if I look at from a short-term perspective, from a medium-term perspective, it is showing signs of bullishness, and also we are seeing some significant volumes which had happened recently. So this stock is one to look at. So any pullback in the stock towards 720, 730 levels, ideally that can be a good level to enter with a stop loss of 683 and a target of 785 on the upside. But you have to remember that this is more of a trading
bet. Yeah. All right, Paytm and IOC, two trading bets, coming in from Aamar. With that, Aamar, thanks a lot for taking our time and joining in and sharing your insights with us. Of course, always appreciate you joining in.
Thank you.
Thanks a lot. Well, with that, of course, we've come to the end of morning trade, but nevertheless, poised for a weak open below that 22,000 mark. In fact, even below that 21,900 mark, if you look at what the Gift Nifty is indicating. And Bank Nifty will be particularly watched out for, as we will be reacting to HDFC Bank's mixed showing in the third quarter. ADRs have taken it on the chin, but we'll have to see how we react to that. So watch out for that. But with that completely timed out, thanks a lot for tuning in from me and the entire team. But of course, stay tuned, because coming up next is Opening Bell.